Hello and welcome to Startup Street. I'm Arundhati Ramanan and these are the top headlines from the startup world. Mama Earth's parent company Honasa takes Hindustan Unilever to court over an advertisement for Lakme's sunscreen. Honasa claims the Lakme ad is disparaging. HUL defends the ad. Delhi High Court likely to hear the case tomorrow. IPO-bound off-business and industrial goods and services procurement platform raises 100 crore rupees from Cornerstone Ventures. The proceeds will be used to drive digital adoption and make finance accessible for small and medium enterprises. Drone startup Garuda Aerospace secures 100 crore rupees in Series B funding round from venture capitalists. This at a valuation of $250 million. Funds will be used to scale production facility and fast-track the completion of R&D and testing center dedicated to advanced defense drone design. Magma, a B2B industrial solutions provider, closes a $5 million Series A funding round led by Capriya Ventures. This operationally profitable startup is currently growing at a 250 crore rupee revenue run rate and aims to scale this even further. Alphabet's Google faces £5 billion lawsuit in the UK over alleged abuse of dominant market position in the online search industry. The lawsuit claims Google abused its position to restrict competing search engines and made itself the only viable destination for online search advertising. Those were the headlines from the startup world. Now to a legal battle that has played out between Honasa and HUL. Mama Earth's parent company, Honasa, has taken Hindustan Unilever to court over an advertisement for Lakme's sunscreen. Shilpa Ranipeta is here with all of those details on this legal battle. Shilpa, take us through what's going on.
Well, there's an SPF war that's brewing between HUL and Honasa Consumer, and this is a day after Honasa actually sued HUL in the Delhi High Court. Now, HUL, which is the latest, has moved to the Bombay High Court against Honasa Consumer, alleging brand disparagement in an ad for the Dermaco sunscreen. Now, HUL alleges that a recent Dermaco billboard directly targets its Lakme ad, quoting, and hey Lakme, congratulations on finally getting SPF 50 in vivo tested. Welcome to the Dermaco standard. Now, HUL is seeking a court directive to restrain Honasa from further brand disparagement. Now, this comes close on the heels of Honasa's case against HUL in the Delhi High Court over a Lakme campaign which features an SPF lie detector test, which claims that some SPF sunscreens actually offer as little as SPF 20 protection. Now, Honasa alleges that the unnamed product that shown in the ad actually resembles the Dermaco sunscreen, and it has sought the ad's takedown, calling it misleading and damaging to its brand. Now, the Delhi High Court has noted that the Lakme ad appears to be disparaging on the face of it and has sought HUL's response. Now, that matter will be heard next on the 17th of April. Now, notably, India currently lacks a clear regulatory framework for SPF testing. There's no watchdog verifying the product claims. Now, HUL maintains that Lakme has followed the in vivo SPF testing, which is considered the global gold standard since 2015, and says that independent lab test results show that several brands, including some of the online bestsellers, fall short on their claims. Now, the two legal battles, Honasa's in the Delhi High Court and HUL's in the Bombay High Court, underscore an intensifying competition in India's 2,000 crore sunscreen market, and it will be interesting to see how this plays out. Back to you.
Absolutely, Shilpa. Many thanks for taking us through those details. Now, one of the many casualties of the volatile market has been India's IPO market, which witnessed a slowdown in recent times. As per Prime database, 144 IPOs worth 1.47 lakh crore rupees are put on hold. Rachna Dhanrajani is here with a list of IPOs that have hit a pause button. Rachna?
That's right. India's IPO timeline has hit a major roadblock. A staggering 144 companies with public issue plans worth 1.47 lakh rupees are currently on hold. Of these, 67 firms are waiting for SEBI's nod to go ahead. This is according to data from Prime database. But the slowdown is not just on paper. It's visible in the numbers as well. January and February saw just 16,000 crore rupees raised from 10 main board IPOs. That's a sharp 37% decline from the previous month, December 2024. And in March, the IPO market came to a complete standstill. Not a single main board issue was launched. This reflects the deep freeze gripping India's primary markets. Several high-profile names have either delayed or scaled back their IPO plans, citing market conditions, valuation concerns and regulatory delays. Start with Ather Energy, as we've been reporting for weeks now that the electric two-wheeler maker had initially aimed for a 4,000 crore rupee IPO. But that number has now been revised down to roughly 3,000 crore rupees. Its valuation has also taken a significant hit from initial 20,000 crore, then revised again, and now it's again at 12,800 crore rupees. That's what we're told by our sources. Ather has already filed 2 updated DRHPs, pushing the timeline for the launch to finally end of this month. Urban Company is also in wait-and-watch mode. The platform, which was targeting a $2 to $3 billion valuation and hoped to raise about 3,000 crore rupees via the IPO, has now taken a 80% cut in its issue and now aims to raise about 500 crore rupees. The timeline, however, seems to be on track for Urban Company. Another much-anticipated one is Milky Mist. The dairy major is moving forward with its IPO plans and has aimed to raise about 2,000 crore rupees by the end of this year, backed by 50 crore rupees in profits that they made in FY24. The company is also working on pre-IPO funding round to shore up investor confidence amid the current volatility and ahead of their launch, of course. But then there's LG Electronics India. Its massive 15,000 crore offer for sale, once expected to be one of the largest consumer IPOs in the Indian market, has now been shelved. Sources have said that the delay is due to global macroeconomic uncertainties and shifting investor sentiment, both of which have prompted the company to rethink its timing. As per sources, JSW Cement too has pushed its 4,000 crore rupee IPO to July now. Zepto, that has been much spoken about in the IPO circles, but is now in process of adding more domestic names to its cap table and is so conducting pre-IPO rounds. It also has valuation concerns that we've seen amid the volatility, but it is now expected to finally go ahead with its IPO in Q3 of this year. According to sources, even Tata Capital, whose 15,000 crore rupee IPO was widely anticipated, has decided to delay its listing plans amid the tepid market environment. Put together, these delays point to a broader malaise in India's primary markets. Regulatory bottlenecks, concerns over inflated valuations and volatile global cues have made companies cautious about going public. SEBI's tighter scrutiny under the Market Infrastructure Institutions framework is also slowing down this process. For entities like NSDL, which is still working through regulatory approvals until there's greater clarity on interest rates, macroeconomic stability and investor appetite, India's IPO pipeline, which was once flush with momentum, may continue to remain on ice, but we will be keeping an eye out for the same.
All right, Rachna, thank you so much for taking us through all of those details on what's brewing today. We have with us Magma, which is an industrial B2B solutions provider and has just raised $5 million in a Series A round led by Capriya Ventures with backing from big names like General Catalyst and ASEAN Venture Lab. Now, the company is setting its sights on becoming the go-to operating system for factories across India. And joining me now to discuss their growth plans is Neil Thakkar, the founder of Magma. Neil, thank you so much for taking time out and being here with us on Startup Street. You know, before we get to the fundraise, right, if you could sort of take us through the key differentiators that position Magma as a category-defining industrial solutions provider in India, and, you know, what are your key offerings?
Yeah, thanks, Arundhati, first of all, for having me. You know, it's wonderful to be here. To give you a sense, you know, Magma is a end-to-end industrial solutions provider. We serve factories and we provide them with a wide range of critical manufacturing solutions, ranging from their pre-production to post-production offerings. So we take a pretty integrated approach compared to incumbents in the space. You know, one of the overarching theses for us has been that a lot has been talked about China plus one and shift of manufacturing from China to India, but very little has been talked about whether these factories in India are actually ready. And precisely what Magma is about is getting these factories ready. So we've built a suite of critical solutions, and, you know, to give you a sense of our offerings, you know, we have a pre-production offering where we provide customized raw material solutions to factories. We have a green energy and biomaterials business where we actually serve day-to-day energy requirements for a factory. We have a waste management business where we help factories liquidate their waste, we recycle it. So if you think about our offerings, you know, right from input to output, we've created an ecosystem play, really ensuring that, you know, we become the integrated solution partner for our factories.
Sure. And, you know, if you could quickly tell us, how will you use this $5 million Series A funding? You know, you're looking to allocate it across backward integration, tech development, and your core factory offerings?
Yeah, absolutely. Look, this is our third raise in the past 3 years. The company is 3 years old, and this marks our third raise. We've raised $3.3 million before in the past from notable investors like General Catalyst, Axion, Way, as legendary institutional investors. And we're so excited and lucky to be welcoming Capria Ventures, another global marquee institutional investor on the cap table with this round. In terms of the proceeds of the funds, right? What we've been mindful is building a proven playbook. So this round is particularly very strategic for the company because we don't want to invest this capital in experimentation. We want to invest in proven playbook. So we're going to be deploying major portion of the capital in building that robust infrastructure around it. And of course, with that backward integration model, it's something that I mentioned is Magma's best kept secret. We like to own the entire value chain. We like to optimize every step of the value chain. And what that means is that, we want to partner with, without going into the specific, tens of captive facilities working for us.
Sure.
And yeah.
Yeah. And, you have over 250 industrial clients already on board, right? So how does Magma plan to deepen your client relationship and increase wallet share across your existing customer base?
Yeah, look, our approach is pretty straightforward. Every offering that you take from Magma at least gives us a double-digit % share in the wallet. So the more we can, milk margins from the same customer, deepen our wallet share. I mean, when we talk about the 250 industrial customers, right? We've already, got validated by replicating our playbook with industrial conglomerates like Reliance, Arvind. So when we talk about the long tail SMEs, right, it's really about building a funnel, giving them what they need day to day, and then kind of cross-selling and upselling the other offerings, which will help us expand the wallet share.
All right. And given that Magma is operationally profitable, how does the company plan to maintain this profitability while scaling aggressively to reach 1,000 crore rupees in revenue run rate?
Yeah, absolutely. Look, we've been, pretty optimistic on that number. Hopefully soon enough we achieve that, maybe in the next 18 to 24 months. When we talk about growth, right? Look, we've multiplied the company on a scale of millions of dollars. When you look at the last 24 months, we've just grown, and we're going to continue multiplying. I believe we're one of the fastest growing industrial and supply chain enablement startups in the country right now. So we're going to continue doubling down on growth. Of course, not just top line. From an economics point of view, Arundhati, we take a very bottoms up approach. Today, 70% of our business is already at double-digit margins, right? So when you talk about B2B, it's often viewed as a low-margin business, but we want to do that with the right rotation of working capital. When Deloitte did our financial and tax diligence, they noted a 18-day working capital cycle. So we're willing to, just stick to that. And for that, the simple thing we always tell ourselves is we want to be critical for factories. So if we continue expanding our offerings, which are critical for them, naturally, we're going to see the top line and bottom line pan out as we expect it to.
All right. And in 30 seconds, if you could tell us what's the expansion plan, any new regions that you're looking at entering?
Yeah, Rajasthan, Maharashtra, Andhra Pradesh, these are three particular regions where we're going to start expanding. Of course, we're, building a playbook there because, how our playbook in Gujarat was that, we were using our green energy business and then kind of building our funnel and then cross-selling and upselling our high margin offerings. So we're going to be building a playbook across these three. Secondly, of course, we want to ramp up our manufacturing capabilities. Today, we have 8 captive facilities working with us. Hopefully, by the end of this calendar year, we are targeting to scale that over to 20 manufacturing capabilities, and this fundraise is just definitely going to allow us for that. And lastly, invest in tech, invest in team. This is a company that's taken a tech first approach since day one.
Sure.
Even yeah.
All right, Neil. Thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this venture going forward.
Thank you so much. It's a pleasure.
Moving on, Gurugram-based cross-border startup Xindus has raised $10 million in a Series A round led by 314 Capital and Oreos Venture Partners. The company, which helps Indian SMEs expand globally, plans to onboard 10,000 businesses and hit $200 million in GMV over the next 18 months. With bold moves into markets like the US, UK and the Middle East, Xindus is building a global trade engine tailored for India's exporters. So how do they plan to scale this vision? Joining me now to discuss this further is Saurabh Goel, the CEO and co-founder of Xindus. Saurabh, thank you so much for taking time out and being here with us, on Startup Street. If you could start by telling us what are the core challenges in global trade that Xindus is solving for, especially for the Indian SMEs, and how does the Xindus One platform differentiate itself from other global logistics and compliance solutions?
Sure. Arundhati, first, thanks for, of course, having me here. Great to be here speaking to you. And I think, thematically, right, you were just talking to another startup about how it is the right time for India to build exports. And a lot of small, medium-sized businesses in India have had very limited exposure to doing exports. And, even when they've done it, right, it's not been the most efficient way. Number of hurdles on the way, from shipping to figuring out product compliance, to trade compliance, needing legal entities in destination markets, local fulfillment, taxation, duties, and also in today's context, right, with so much changes happening in the regulatory sort of framework, right, small, medium-sized businesses struggle to put all of this together into what I call a modern day tech silk route, right, to be able to operate efficiently. And eventually, right, that leads to sort of, denial of market access, increased costs, and essentially means that you're not able to sort of perform to potential, right? So simply put, right, at Xindus One, we try to bring all of this into a single operating system for global exports to allow small, medium-sized businesses to operate like large businesses with the same efficiencies. In some ways we say like Alibaba and Amazon, and be able to sort of go to the world and sort of win in international markets.
Right, and you've raised this $10 million in a Series A round. If you could sort of explain to us how you plan to allocate the capital across product development, market expansion, and customer acquisition.
Sure. So the last 2 years, we largely spent time building the India into the US corridor. Over the last couple of months, we just launched into UK. So one of the things that we will do is we will rapidly expand geographic reach for Indian small businesses, medium-sized businesses. So we're looking to sort of open up Canada, Europe, Middle East, Australia as sort of markets. We're looking to deepen the product stack from shipping via air and ocean, trade compliance, product compliance, local fulfillment in destination markets, ability to run merchant on record solutions, local fulfillment returns, etc. And of course, integration into hundreds of marketplaces around the world, both B2B, B2C, so that startups and Indian startups, Indian small, medium-sized businesses can expand at pace as the world opens up an opportunity for sort of global trade to get reordered with everything that's sort of happening, right? So that's the second piece that we will do. The third piece that we're sort of looking to do is that today we've served about 1,000 businesses, right? So the next 18 months, our goal is to take this to 10,000 businesses. Today we're at about a $30 million GMV run rate. We plan to expand this to about a $200 million GMV run rate. So basically, right, if you sort of put it together, geographic expansion, product depth, more number of customers, and then of course leading to higher sort of wallet share and more GMV running through the platform.
Right, you just pointed out about how you want to take your GMV from current levels to $200 million within the next 12 to 18 months. Are you on track to do this? Can you take us through the kind of targets you hope to hit by the end of this year and what you're currently making?
Sure. So like you said, right, we're at about $30 million GMV run rate right now. So the customers who work with us, right, we find very high core retention stickiness on those customers. So as we expand corridors, we know that many of our customers work across corridors, and we expect to gain that wallet share just basis the level of trust, relationship, repeatability, stickiness that we see. So there's just a growth in GMV by serving the same customers across corridors. That's one. And two, of course, as we take the sort of number of customers from the current 1,000 to 10,000 with a very proven playbook where we sort of starting to add 150, 200 customers per month and sort of ramping that up at a very, very aggressive rate now. We feel very confident that maybe by the end of this year, we will probably be close to about 100 million GMV run rate, and in another 6 to 8 months from there, we should be at about a 200 million GMV run rate. So essentially, we should be able to grow this 5 to 6 times over the next 18 months.
So looking to grow 5 to 6 times in the next 18 months. But if you could sort of explain to us, how do you see the current geopolitical tensions that are happening around the world, right? How do you see that impacting the business? What's the kind of opportunity or challenge that you see here?
Sure. So I was traveling last week, met a lot of people around the region as well, who are sort of deeply into cross-border manufacturing, supply chains, etc. I particularly see this as a window of opportunity for India, right? So global trade is fairly sticky, right? Supply chains are very well entrenched, right? So when geopolitical non-trade reasons upset supply chains, right? Or reorder supply chains. I think there's an opportunity to sort of move at pace. So that is one thing that I see for India particularly, right? Two, for many years, people have been talking about China plus one as a story, and it has been happening at a certain rate. With the amount of uncertainty and volatility, I believe a lot of people will now accelerate that change to be a multi-country sourcing entity, right? And that should play to sort of India's advantage. In certain cases, some of the Southeast Asian competitors from a manufacturing standpoint, I think in certain cases, probably India was at a tariff disadvantage. I think as we are seeing this play out, we should be at a tariff neutrality, if not better. That should sort of play to India's advantage as well. And lastly, right, like I said, one of the things that you need a very tech-driven future future shock-proof supply chain. And that is what Xindus One offers, right? Because we have the ability to allow you to configure your business to optimize on what the sort of environment is. Yeah.
So you see an opportunity here for India, especially in this space. All right, Saurabh, thank you so much for taking time out and being here with us on Startup Street, but we're completely out of time and we wish you all the best going forward.
Thank you. Thanks a lot, Arundhati.
On that note, it is time for us to head into a short break. But coming up next, Bluestone seeks to raise 2,500 crore rupees through its IPO. Conversation with Gaurav Singh Kushwaha, the founder and CEO of Bluestone. On the other side, stay tuned. Welcome back. You're still with us on Startup Street. Bluestone is preparing to raise 2,500 crore rupees through its upcoming IPO. As the company gears up for its public debut, it's also expanding its offline footprint while maintaining a strong digital presence. In a chat with Gaurav Singh Kushwaha, the founder and CEO of Bluestone, my colleague Aishwarya Anand speaks to him about the planned use of IPO funds and the company's strategy to drive profitability ahead of its listing. Take a look.
One big milestone for you is very, very near, where you're planning to go for an IPO. You're planning to raise 2,500 crores via your IPO. So I want to understand, where do you plan on allocating that fund? And what are the plans on that front? And also another thing that I wanted to ask you is, there's a recent report by Stride Ventures which came that a lot of companies are now raising pre-IPO money. So that market in India is opening. You've been one of those. So if you could shed some light that, how does that help a startup, strengthen their balance sheet?
Sure. So in terms of use of capital, as mentioned in the DRHP, a large chunk of it is towards the working capital. Our business requires a lot of inventory, gold, diamonds, and so on. So as we ramp up our store presence, as we reach out to more and more cities and towns in the country, we'll need more capital to open more stores and to have more inventory in those stores. About the pre-IPO round, so last year we took couple of pre-IPO rounds. And the idea there was to make sure that the company is well funded as we go towards your IPO, so that the growth, all the growth plans, all the other capital allocation plans that we have, do not wait for IPO. That was number one. Number two was that we have been around for around 10-11 years and we have been venture funded. Many of our investors had joined our cap table 10-11 years back and so on. And post-IPO there are lock-ins, etc. And many of our investors are not comfortable in the public markets. So the idea was to kind of shift that cap table or swap that cap table and get investors who are more appropriate and more ready for public markets.
You spoke about the expansion of stores, right? So help me understand, how many stores do you have currently, and what are the plans of expanding those by the end of this year, if we can talk about that? And currently, what is the kind of revenue mix you're getting via your online channel, because that's your primary sales for primary source of sales. So what's the kind of revenue mix is through online and offline?
Our store count at the end of December of 2024 was close to 255, and this financial year also, we have expanded very rapidly. Intention is, so if you look at India, it's a very big country. If you look at some of the other jewelry brands like Tanishq, like CaratLane, etc., Malabar, etc., the number of stores that they have are significantly more than what we have. And our stores being a relatively smaller format and relatively smaller catchment, I think there's scope of opening significantly more stores, and there are lots and lots of cities that we can go to. Majority of our customers and majority of our sales originate online to the tune of almost 80 to 90%. Now, given the nature of the category, given that the price points are high, given that this is a category where a customer is not looking for convenience, they are looking for experience.
Correct.
Right? So after spending several weeks online, a lot of these consumers then actually go to stores with a short list of product already done. Then they look at those products and more products offline, and then they purchase.
To get the look and the feel,
of that
product. Correct.
So majority of the invoices hence happen in stores.
Are you using quick commerce platforms as a sales channel, or do you plan on getting onboarded? Are there challenges there? If you could shed some light on that.
Sure. So in the past, around some of the events like Valentine's and Dhanteras, we tried the quick commerce platforms with some limited SKUs. What we realized is that products like, or very basic products like coins, etc., they can potentially be sold there. But when it comes to buying proper jewelry, I think people are looking for a much better experience.
They're looking for a much better.
Yeah, and also quick commerce